Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy Thursday to you and your family. Taking a quick look here at Comp, seeing what's going on. This is actually a really cool coin. We took some profits on here recently. What was it? Technically, it was a trade that we had opened up a couple of weeks ago, but we did hit our target there. Basically, our second profit target, roughly 40% in 2 weeks. Keep in mind, this is only 5x leverage. We keep it low and safe to make sure that our community members have the opportunity to be able to find those trades and to effectively swing trade correctly. But truth is, it's really this coin I think is taken off and has a lot of potential. We're going to talk about that much more. There's some fair value gaps and some chart patterns we want to talk about. But before we do, I do want to recommend that you check out our BingX exclusive offer here. Basically, it's an iPhone 15 Pro and a few other benefits there. All you have to do is use my link to register and effectively become a member of their service, for lack of better terms, basically just becoming a part of their exchange. And they're really good for the US and any kind of restricted country because there's no VPN or KYC required. Thanks again, BingX, for allowing this offer. Keep in mind, too, BingX is going to be working with Cornix here soon. So to all my traders there that are using Cornix, that'll be an exchange available here in the relative near future. So with Comp, what we want to talk about is a few things. First things first, I think, is, let's start with the daily and kind of work our way down and just recognize that we broke through a lot of these key level resistances, okay? So it's really awesome to be able to see this. Keep in mind, this coin could keep going. It has a tendency of taking off and doing very good things. I mean, previously we saw 135% in like 6 days, okay? So keep in mind, this coin just started going. It would be very, I don't think it's bad advice, but I just don't think it'd be ideal or sound to just consider shorting because it just seems like it's overextended. A lot of coins right now are overextending themselves and not pulling back, and they're going for these second and third waves to be able to kind of wipe out a lot of liquidation before it pulls back officially. So try not to get super excited about that. I do like to get excited about certain things, but I think that in trading, emotions should be put on the sidelines. And we need to make sure that we recognize some other stuff too. Look at this more abstractly, like a business, not as if you're gambling. Okay, you shouldn't feel super excited about a trade. It's okay to feel okay, when the trade's over, but going into it, it's easier said than done. I know. Sorry, I have all my trading videos too. By the way, if you're currently a community member, part of our premium membership, make sure you reference our private videos there for all the university videos that you can watch. I talk a lot about emotional trading and how it's a path to the dark side. Okay, so let's talk about this here. Sorry, enough ranting. 70 on the RSI is getting tested right now, but we see money flow index being high. What does that mean for us? Well, it means we could very well pass that level. The likelihood of that is less because, again, we are overextended going into the day. I mean, for this day here so far, bottom to top, almost a 25% play. Okay, so it's range 25% in the day, maybe close to 20% from close to open. But the bottom line here is that we're in a situation where we're mostly bullish in all aspects of this scenario here, but we're getting overextended. Okay, so again, do not by any stretch just take a trade because it's overextended one way or the other. Overextension honestly means very little if you don't have complementing factors. Okay, so we're going to try to see if we have anything there. But the truth is here that the price should pull back just for a natural correction. That's how it's supposed to happen. But cryptocurrency is anything other than natural. Okay, what I mean by that here is take a look at these fair value gaps. So first of all, we can see the price gapped up initially, created an initial fair value gap, pretty much lulled all the early shorts into into the trade. They got destroyed, which is why we saw a second fair value gap. And of course, we're at this point right now where we got an increased amount of volume. Let's look at volume really quick and kind of just recognize how much volume we have in certain ranges. The most amount of volume accumulation, of course, is $40. So the price comes back to that level. We should expect that to be the bottom. Okay. So I don't think we're going to see that happen unless Bitcoin shoots down to 20,000. But simply put, this coin does look like it's here to stay based on the amount of volume that we're seeing at this higher price range. Okay. We got a decent amount of volume in the last 12 hours, more than you can even accomplish in this little range here. So what it took 12 hours to get there, we have twice as much volume now that we're there. So what that basically just means is that the price shouldn't drop super hard. If it does, it'll bounce down to the 0.5 level and essentially continue higher from there. The reason why I say that is because it's a natural occurrence in Elliott wave theory. It's a natural occurrence in Fibonacci retracement. The halfway mark is commonly the place in which the price will pull back to. Okay. In other words, if you consider this the bottom, right, this is basically the most recent low, then you can consider this the top, and the halfway point is usually where the price will pull back to before it legs up again. Coincidentally, the most recent high is really close to that range, right? In that 0.618, 0.5 Fibonacci retracement. So those are all just common areas. In other words, not telling you to short, but if you were to, those will be good targets to hit, and then to consider closing your position, because it shouldn't go much lower than that if it does. Okay, just letting you know if it pulls back, that's what's going to happen. Now, is there a lot of momentum and continuation here? Yeah, absolutely. Let's go ahead and see if it's enough to warrant a short or a long. So take a look at TD sequential. We can see we hit a 9 here recently. We went a 1 all the way through a 9. If you're not familiar with TD sequential, just counts. It basically takes the fourth previous candlestick and continues higher until it hits a 9. Once you're at 9, the likelihood of a pullback becomes greater. So we should have saw the pullback here, right? But instead, we saw this fair value gap where the price shot straight up. Coincidentally, there's no, okay, sorry, that's sarcastic. There is no coincidence there. The main reason why that happened is because this resistance level here, again, 0.5 in Fibonacci, is letting us know that the price is going to squeeze out some shorts. In other words, a lot of shorts will hedge just above key level Fibonacci retracement levels, most recent highs, for example. So they're going to put their short stops right there. As soon as the price hit this level, it shot even further because it squeezed out a lot of those shorts. Okay, so that's a natural short squeeze. Very, very common occurrence. What I'm getting at here is that extra amount of volume squeezed out the shorts. Now the shorts are scared and concerned about taking those positions, and the longs have the freedom to do what they want right now. Okay, it's kind of what's going on, the kind of the back end psychology of what they're thinking. Even though yes, we are overextended on pretty much every situation here, a pullback, while it should make sense, may not occur. So to me, I don't like to risk taking a short on the way down in case it pumps up again. I'd rather wait for a long, and I'm going to set an alert here in the 44.5 range, just so I can reevaluate when the price comes down to that level. Okay, so I like to be alerted on these things later so I can see what's happening when it gets there. Again, if it gets there. The key takeaway here is that instead of shorting down and trying to take a long at that level, instead of shorting, I'm recommending you wait to take that long, because if you do and you miss your opportunity, then you don't have a situation where you're in the red because you took a short too early. Okay. Now you'd like to think that this is an early short, but truth is this is probably still an early short, and there's a lot more meat left on the bone. Okay, so just keep that in mind. Let's take a quick peek here at liquidity levels as well. There's not a whole heck of a lot above us, just mostly below. So that does imply that we may not have another liquidation hunt, and that the price action could actually pull back. Okay, so again, me being more of a safer trader, I prefer to use low leverage, low position size. I'm going to try to get in at a lower price point for a long when it inevitably comes down to retest this 0.382 to 0.618 Fibonacci range. Okay, that's just my speculation. That's the way that I trade. Okay, I'm a little more safer, conservative. I survive markets because of this. I try not to use too much risk. There's a risk every time you trade, don't get me wrong. But you use lower leverage, you have more flexibility with your trades. In this situation, I think it's best to kind of wait on the sidelines and just consider the fact that the price will go up further before it comes down. That's usually what happens with these types of situations, especially now that Bitcoin's kind of averaging itself out. If Bitcoin continues to maintain its current price point, Bitcoin dominance stabilizes, altcoins will shoot up, and we're going to see that happen here again. So truth is, it's still overextended. Take a look at this here. We're at a 9 plus. So on all time frames, it's telling us it wants to pull back. Okay. So will it? Sure, it might. It very well could. But I'd much rather, again, take a long at a lower price point than short on the way down. Even though it is overextended, it's still very healthy continuation. What I mean by that is just we've got this kind of up over staircase pattern. Even though this is a very, very big step, we can still see leading into it that little short squeeze. There's a lot of volume accumulating at this range. Okay, so you can kind of see this volume. That's the short squeeze right there where the price shot up, and now it's maintaining itself higher. The bears are scared. They're hibernating right now, waiting for a good opportunity. Okay, and I recommend you wait for a good opportunity too. In other words, if we break this level here, just say this 0.786 Fibonacci level at $47, then that might be a case in point to consider shorting to this fair value gap. Okay, but until then, as long as we can maintain this range here, we're going to be just fine to see that next leg up. Okay, I think that next leg up could happen this weekend, depending on if obviously Bitcoin sells off leading into that, or if it can stabilize and stay where it's at. We want a closure of 27,000 or higher today. I think that's the important thing. All right, so again, that's where we're at. I want to hear your thoughts. What are you thinking here? Is this definitely something that's worth investing in? Do you have an investment in this coin? Or more important, how much further up or down do you think it's going to go? Comment below. Love to hear it. Greatly appreciate the feedback. Like, follow, subscribe. Jump on over to our Discord here. Make sure you get to know some of our traders. We got some awesome, phenomenal traders over there. And then same thing too with our Twitter, Telegram. Those are both really good resources for playout charts that I send for these coins that I like to review. Okay, so kind of just give you some perspective on, different trades that might play out depending on the environment. So be sure to check that out. I do greatly appreciate all the support. Thanks again so much for the wonderful feedback to my newer members that are having good benefit with the trades, the signals, but also just having some continuity there with our not coworkers. Like, I guess they're my coworkers, if you will, because everyone in my community is my equal, and we all love to learn and grow together. So be sure to check it out. Thanks again. We'll see you in the next one. Take good care.